Today's edition of Toggle's Daily Video Insights. My name is Jan, I'm one of the co-founders of Toggle, and for those of you who are joining us for the first time, we take a look at one of the many insights generated by Toggle on a market trading morning and take a deeper dive to try and better understand what are the drivers that are currently powering the stock up or down. So if you'd like to see more of these insights and better understand the drivers behind some of the biggest names out there in the equity market, please subscribe to our YouTube channel, or alternatively, just try Toggle itself. Just go to toggle.global and it's free to try. The focus today is going to be on Carvana, a company many of you know. Maybe some of you have also bought cars through them. But what we want to focus on is specifically the latest pressures and drivers that Toggle is highlighting. As you can see, there was actually one a while back which had been completed successfully, and that was in March. What we have received recently is actually just one from a couple of days ago, which suggested that actually this was possibly an oversold situation where the stock was likely to rebound afterwards. So clicking on this card, you can see that this is actually quite a short-term driver in effect for about a month, and that the suggested move was about 15 or just shy of 15% over those following 4 weeks. This would place it from the 223.87 as a starting point to 256.25. Again, hopefully staying within this confidence band right here, which is informed by all of those past experiences when we had a similar sell-off, and by all means staying above the red line at 207.68, because below it the chances of this driver still being the active one will have diminished quite substantially. Now, why might it move? Simply, as you can see here, the move adjusted by the volatility of the stock has been exaggerated. So if we take these latest data points and if we compare to other sell-offs going back to 2017, you can see, although in some cases you really need to squint, but you can see that in many cases this coincided with quite a strong rebound by the stock price. Looking at the past performance, that's another way of seeing it. And again, as you can see, the risk reward here is really quite compelling because you have most of the downside concentrated clearly near zero, although again you have to be careful and respect the red line. There have been some cases where the stock declined almost 25%, but at the same time the upside is potentially quite tremendous. In some cases you saw returns of over 25%, quite a bit over 25%, although again those were far and few between. The focus of this was based on 11 similar occasions where you've had those kind of sell-offs, which is what we had just looked through before. And so take a look and see whether or not this kind of stock might fit your portfolio, if the trade is the kind that fits your investing style. So much for Carvana. In the daily brief, we also discuss the coming inflation and where you are able to see it, and most importantly, what that might mean for the market. In the meantime, thank you for your attention, and we'll see you again tomorrow.